Time for the market report. Once again, international issues, the big deal.
That's right, Mike. You know, these things can have a dramatic effect on prices, along with normal market forces, and we'll talk about it. But first, the numbers. What were the week's biggest gains and losses? And then several new USDA reports updating us on cattle and the status of our row crops so far this year. And finally, two experts weigh in on the cattle markets and how international conflict can affect them along with row crops. So, markets closed the week moving down, but for how long? Let's take a look. The week's biggest gain, soybean oil, once again, this time up nearly 4 cents, more than a 7.5% increase from the previous week. Wheat also had a big jump by more than 7.25%. The week's biggest loss, corn, down by nearly 16 cents. That's more than a 3.5% decrease from the previous week. So, several new USDA reports released. The Cattle on Feed report updating us on the current cattle situation in the U.S., and the Crop Progress report updating us on how things look in row crops. Here's Bella Bingham with those details.
In the Cattle on Feed report, looks like the herd is still on the lower side. Cattle and calves on feed for the slaughter market down by 1% compared to June last year. Placements in feedlots during May of this year down 8% compared to 2024. Marketings of fed cattle from last month also down by 10% compared to last year, while other disappearances, which is lost from a herd or inventory that aren't accounted for by planned sales or marketing, such as natural death, movement to pasture, or transfers to different feedlots, that number unchanged compared to last year. In the Crop Progress report, more positive news for row crops so far this year. In the 18 top corn-producing states, emergence 97%, which is 1% higher than last year and only 1% lower than the 4-year average. Corn silking, which is the emergence of the female reproductive parts from the husk of the ear, at 4%, which is the same as last year and 1% higher than the 4-year average. Corn condition in great shape, as 69% reported good to excellent. In the top 18 soybean-producing states, Mississippi included, planting 96% complete, which is the same as last year and only 1% lower than the 4-year average. Soybeans emerged at 90%, which is 1% higher than last year but equal to the 4-year average. Blooming just starting with 8% so far, which is also 1% higher than last year and the 4-year average. Condition encouraging, with 67% reported good to excellent. In the top 15 cotton-producing states, Mississippi also included, planting at 92%, which is only 1% lower than last year and 3% lower than the 4-year average. Squaring, which is the flower formation stage, at 26%, which is 3% lower than last year but equal to the 4-year average. Setting bolls just beginning at 5%, which is 3% lower than last year and 1% lower than the 4-year average. Condition not too bad, with 56% reported good to excellent. In all the rice-producing states, Mississippi included, heading, which is when the seed head emerges from the stem, at 13%, which is 1% higher than last year but 5% higher than the 4-year average. Condition looking great, with 83% reported good to excellent.
As we reported in the news section, international conflicts still heating up, and they can have an effect on market prices, as we've talked about before. However, there's the normal market forces at play too. Analysts Ross Baldwin and Jeff French give us the experts' thoughts on how the market is moving, specifically in cattle.
You've got the cutout where if you take out the spike of COVID, when we got boxes up to 410 briefly, but that was all COVID ramifications. You take that out, we are at all-time record high prices. And so far, we have not seen the consumer blink on beef demand much.
If this conflict goes longer in the Mideast, that potentially is a negative to the stock market. And if the stock market breaks, the cattle will absolutely go through with it. But yeah, we closed below 210 in August. I mean, we're kind of teetering here.
And early this morning, we had recovered. We're trading well above the 20-day. So I agree with Jeff. The 20-day remains key to watch to get back up there. But early this morning, before we had this reversal, futures market looked like it was good. Hey, have we had enough of a short-term correction like we've seen several times recently? And they just hammered the market here today. So it's I think that's what makes Monday's trade really worth watching, because this has been they've aggressively sold these rallies here over the last 10 days. And you can hit a period where, as Jeff's saying, what's left to throw at this market or the funds that they haven't already traded? Profits and extreme profits drive expansion. You go back to $7, $8 corn. What do? You go plant as much corn as you can. You clear every tree that you can possibly clear. Cattle, we're in the same boat. I feel like, while I think expansion, we are underway with expansion, and I think there's more expansion going on than what the market thinks. I don't think it takes time. I mean, you're 3 years out from that. But I do think this year, over the last few months, we have started that expansion phase. My bias says it will get confirmed in, now this is a long time away, but the January of 26 inventory report. I think 25 is when we will bottom this herd in the U.S. You're still a ways down the road from the time that it really has an effect, but it just goes back to profit. I mean, right now, it's difficult to expand it, but when you're making these kind of profit levels that you are, especially the cow-calf guy, you want more calves to sell.
And that's it for a deeper look into the markets. Seems like some big rallies going on right now, fueled by current uncertainty.